Today we're going to review the investment stock of VICI Properties Inc. This is not financial advice. This is just my thoughts on this stock. So here we are on their profile page on investing.com, VICI Properties Inc. This is part of the real estate sector in the S&P 500, and it is experiential properties. So think golf courses, quite a few properties in Las Vegas, casinos, all that kind of experience, beach resorts, experiential real estate properties. This is, you can, if you want to pause the video and read about it, you can right here. But that's what this stock is, and quite a few properties around the US and Canada. Just in the Las Vegas area, 4 golf courses there. So let's look at the numbers. We're going to look at the valuation. We're going to look at the bullish to bearish signals and the charts and the numbers. So let's take a look. All that kind of stuff. Price is currently sitting at $30.36 US. In the last day of trading, it sat pretty much flat, up 0.5%. The last day of trading was the 2nd of March. 2026. So we're recording this on the 3rd of March, and I'll upload it same day so the data is as accurate and close as possible and relevant for everyone watching. Its 52-week range is between $27.48 and $34.03. So it is sitting pretty much right in the middle of that 52-week range at $30.36. Pretty much right in the middle there of that 52-week range. If it goes down, you may find some support at the $27 mark. It oftentimes does kind of like something falling into a trampoline. Oftentimes the support may be there, but it may go a little bit lower before coming back up. Fair value, which we'll take another look at a bit later, this shows a potential upside of 7.9%. This stock would fit in my speculative category, which I only recommend having 1 or 2 speculative stocks in your portfolio. Again, not financial advice, but just my recommendation. Uncertainty is high. Okay, and so if there's high uncertainty around the future, around the investment, around the company, then it fits into that speculative kind of investment. Let's take a look at the bullish to bearish signals. And if you have more questions about, speculation, structuring, setting up a portfolio, please let me know. I'm happy to do a video if you'd like a video on how to set up a portfolio, how to, some different ideas on how you may set one up. But some bullish signals. So the first bullish signal is it has raised. My eyes are doing something funny. It has raised its dividend for 8 consecutive years, which is great. It's good when company continues to raise its dividend. It is trading at a low EBITDA valuation multiple. It is trading at a low earnings multiple. There are two things to take note of. Some positive, it's low in those areas, a low earnings multiple. However, there is a bearish signal around its price to earnings ratio. It is trading at a high price to earnings ratio relative to near-term gains, right? Or relative to near-term earning growth potential. And so we're going to take a little look at that later after the charts, but we'll dig into what that means when we get into valuation and its price to earnings. In the past week, it's been pretty much flat, 0.2%. In the past month, it is up 8%. In the past 3 months, it is up 9%. In the past year, it is down 1.5%, or pretty much flat for the year. For the past year. In the past 5 years, it is up 34%. In the past 10 years, it is up 150%. So on average, 15% a year. That's beating the S&P 500. That's pretty good. So up 150% over the past 10 years. Let's take a look at the valuation. And this is honestly where some of the concerning things come into play. So its price to earnings ratio is 11.7 compared to its peers of 10.1 and the sector of 9.3. So it's already higher than its peers in its price to earnings ratio and higher than the sector in its price to earnings ratio. When we look at the PEG ratio, the PEG ratio is price to earnings plus incorporating growth, expected earnings growth, and this is where we saw that bearish signal of its price to earnings ratio is high, comparing relative to its near-term earnings growth, right? And so when you bring the growth in, it is sitting at a 5.89, meaning, if a company is sitting right where it's, saying, yep, it's valued here, based on its future expected growth, then, based on its future expected growth, it's where it should be. It'll be a 1, right? If it's under 1, between 0 and 1, then it's saying it's undervalued compared to expected growth in the future. If it's over 1, it's overvalued. It's currently overvalued based on this, metric. Now, if it gets into the negatives, that's another story completely. Okay, that's if it gets below 0 into the negatives, then its trajectory is like negative earnings growth. Okay, so that's another story. But for example, Nvidia, which has had a massive run up, Nvidia is still sitting below 1 on its PEG ratio. Compared to its peers are 1.36 and the sector is 0.01. Right, so it is in the PEG ratio, it is significantly higher than its peers, and